Federal Reserve cancels XRP and HBAR bear market, major pivot ahead. Have you been keeping an eye on the Federal Reserve lately? Well, if you haven't, you might want to start. Because let me tell you, the decisions they make can have a huge impact on the crypto market, potentially turning a bear market into a bull run overnight, especially for coins like XRP and HBAR. In this video, I will tell you about the Federal Reserve's influence on crypto, the shifting market sentiment, and what it all means for your investments. Federal Reserve's influence on crypto markets. First, let's get a handle on what the Federal Reserve actually does. The Fed has three primary goals: maximum employment, stable prices, which means keeping inflation in check, and moderate long-term interest rates. Think of it as a balancing act, where the Fed is constantly adjusting the weights to keep the economy from tipping over. When they raise interest rates, they're essentially saying, hey, borrowing money just got more expensive, so maybe think twice before taking that loan for that shiny new car. Interestingly, for crypto investors, changes in interest rates can significantly affect investor behavior. When the Fed raises rates, borrowing costs increase, which tends to cool off spending and investment. This is where the irony kicks in. While the Fed aims to stabilize the economy, their actions can lead to a downturn in the very markets they're trying to protect. For instance, back in March 2022, when the Fed announced a 25 basis point increase, the crypto market reacted like a teenager who just found out their favorite band canceled a concert. Lots of angst and a sharp sell-off. Bitcoin dropped nearly 7.9% in a matter of hours. The relationship between interest rates and cryptocurrency prices can be visualized as an inverse one. When rates go up, crypto prices tend to go down. I think it's simple. Higher interest rates make traditional savings accounts and bonds more attractive. Investors start thinking, why take a risk on crypto when I can earn a guaranteed return on my savings? Okay, to really understand this dynamic, let's rewind to 2018. Under then Fed Chair Janet Yellen, the Fed did a series of interest rate hikes aimed at curbing inflation. During this period, Bitcoin's price plummeted from nearly $20,000 in December 2017 to around $3,200 by December 2018. That's a huge loss of over 80%. This wasn't just a case of bad luck, man. The rising interest rate environment played a crucial role in this dramatic decline. As Bitcoin fell, it dragged down the entire crypto market with it, leading to what many dubbed the crypto winter. Then, in 2021, we saw a similar pattern. The Fed's aggressive rate hikes throughout that year coincided with a big downturn in crypto prices. It's almost as if the market has a sixth sense when it comes to anticipating Fed decisions. Traders often price in expectations ahead of Federal Open Market Committee (FOMC) meetings, leading to preemptive moves in the market. If the market expects a rate hike, it often starts to sell off before the announcement, creating a self-fulfilling prophecy of sorts. Potential shift in market sentiment. While we're at it, let's talk about market sentiment. It's the overall attitude and mood of investors towards a particular asset or market. The collective feeling of fear, greed, optimism, or pessimism drives buying and selling decisions. When sentiment is positive, investors are more likely to buy, pushing prices higher. But when sentiment turns sour, everyone wants to sell, and prices plummet. It's often driven by psychological factors, herd mentality, and good old-fashioned FOMO. This cycle is something every investor should be aware of. Recently, we've seen some indicators suggesting a shift from bearish to bullish for XRP and HBAR. At the time of this video, XRP is trading around $0.50. That might not sound like a fortune, but considering it was hovering around $0.30 just a few months ago, it's a significant uptick. When a judge ruled that XRP could be sold on exchanges without being classified as a security, the price jumped nearly 20% in a single day. Investors are now cautiously optimistic. Many are betting that a favorable resolution to the SEC case could propel XRP back to its previous all-time highs of around $384, which it reached in January 2018. That would be like an increase of over 600% from its current price. On the other hand, HBR, which is currently trading around 0.07, is gaining attention for its innovative technology. With its hash graph consensus algorithm, HBR can process thousands of transactions per second, making it a strong contender for businesses looking to build decentralized applications. This technological edge has attracted the attention of major corporations, including Google and IBM, who have partnered with Hedera to explore blockchain solutions. These recent partnerships with major corporations are obviously boosting its credibility. In terms of market trends, HBAR has seen a steady increase in trading volume, which is often a bullish sign. Investors are starting to recognize its potential, and as more projects are built on the Hedera network, demand for HBAR is likely to grow. Some analysts predict that HBAR could reach 0.20 within the next year, which would be a solid return on investment for those who get in now. Keep an eye on social media and community forums. I think these can be great indicators of shifting sentiment. If you see more positive discussions around XRP and HBAR, it might be time to consider your investment strategy. Investment opportunities. Speaking of strategy, with all the potential for a market pivot, what strategies should you consider? First, of course, diversification. While both XRP and HBAR have their merits, it's wise to diversify your portfolio to mitigate risk. Try allocating a portion of your investment to other crypto, stocks, or even traditional assets. I personally recommend you to look for projects with strong fundamentals and real-world use cases. Another effective strategy for investing in crypto is dollar cost averaging. This method involves investing a fixed amount of money at regular intervals, regardless of the asset's price. Think of it as setting aside a little money each week for a rainy day, except in this case, you're hoping for a sunny day filled with profits. With DCA, you reduce the impact of volatility. Let's say if you decide to invest $100 in XRP every month, you'll buy more tokens when prices are low and fewer when prices are high. Over time, this strategy can lead to a lower average cost per token, which is especially beneficial in a market as unpredictable as crypto. While it's tempting to go all in on a hot asset, it's crucial to practice risk management. Set a budget for your investments and stick to it. Come on, this is not the time to bet your life savings on a single cryptocurrency, no matter how promising it seems. Staying informed is key to making smart investment decisions. Follow reputable news sources, join online communities, and keep an eye on social media for updates about XRP, HBAR, and the broader crypto market. Sometimes, a single tweet can send prices soaring or crashing, so it pays to be in the loop. Yeah, Elon, I am talking to you. On a serious note, consider setting up alerts for big price movements or news events. This way, you can react quickly if something major happens, like if XRP suddenly gains a new partnership, or if HBAR announces a groundbreaking technological advancement. Expert opinions and broader economic context. When it comes to expert opinions, we have a mixed bag of predictions and analyses. Some analysts are bullish on XRP. Why not? Consider the global remittance market, which is worth over $700 billion annually. If XRP can capture even a fraction of that market, we're talking about pretty huge growth potential. So, if you're holding XRP, you might want to keep your fingers crossed for a favorable court ruling, because that could be the catalyst for a major price rally. On the flip side, some experts remain cautious. They argue that even with a legal victory, XRP could face ongoing scrutiny that might hinder its adoption. This is a valid point, I think, especially considering how quickly regulations can change in the crypto space. Zoom out and consider the broader economic context. Well, it's constantly shifting. As we've discussed, the Federal Reserve's monetary policy plays a significant role in shaping market dynamics. With inflation rates hovering around 4%, the Fed has been under pressure to manage interest rates carefully. If inflation continues to rise, I think we could see more investors flocking to cryptos as a hedge against traditional fiat currencies. This could create a favorable environment for both XRP and HBAR. Additionally, global economic conditions are also at play. The ongoing geopolitical tensions and uncertainties in traditional markets can drive investors toward alternative assets like cryptos. When stock markets are volatile, many investors look for safer havens, and cryptocurrencies often fit that bill, at least in theory. Here's where the irony kicks in. Again, cryptos are often touted as a safe haven, yet they can be incredibly volatile. It's like saying a roller coaster is a safe ride because it has a seatbelt. Sure, it's there, but you're still in for a wild ride. In times of economic uncertainty, if investors perceive cryptocurrencies as a viable alternative to traditional assets, we could see a surge in demand. This is particularly true for XRP, which has been working hard to establish itself as a legitimate player in the financial sector. If it can gain traction as a mainstream payment solution, it could attract institutional investors looking for exposure to digital assets. And that's a wrap. So, what are your thoughts on XRP and HBAR? Do you think XRP will overcome its legal hurdles, or is HBAR poised to take the lead in the blockchain space? Share your opinions and comments below. Before you go, don't forget to check out our recent video on why XRP is set to explode. Largest XRP holder explained. Make sure you hit that subscribe button and press the bell icon. Thanks for watching.